Good afternoon, Maverick traders. Joe with you here on a Tuesday. It's the 24th of October. Let's jump into the markets. Take responsibility for what you get from these courses. As always, I'm going to break down the meaningful news of the day, what happened. I'm going to get into the charts, and always go through some of the trades that the community has submitted for us to take a look at.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that we experienced yet another bounce, and this was expected. We talked about this on the weekend class, as well as Corey made mention of it yesterday. But you can see that we had a pretty good support level that all of the markets bounced off of. So let's jump straight into how do we finish today? Well, let's take a look at it. The Dow, the S&P, and the Qs were all to the positive side by all less than 1%. So a little bit more of a bounce than a move to the upside, or I should say anything substantial to the upside. We'll get to the chart here in a second. The Russells, just shy of 1%, 0.82. Oil had a pretty good drop today, over 2%, and gold coming in flat. Anything in the news to create this? Well, the markets did bounce off of lower support levels. The economy is showing signs of some strength, but is this good or bad news in the long run? The Fed seems to say that it is bad because the economy is a little bit too hot, trying to stay in that 2% inflation. We actually do have a number that could be coming out next week with our GDP coming in at 4%, maybe even 5%. That's a pretty good sign of expansion. I don't think that's what the Fed wants to see. So we're in this situation to where is good news, bad news? Well, we'll see how the markets take it. Earnings season is in full swing. We do have some announcements. We do have some earnings that have come out as of late. We'll talk about that in 1 second. Finishing up here with the advanced decline line, 67% advancing, 29% declining. Above below the 50% moving average, or I should say the 50-day moving average, 82% below, 18% above. So even in light of the move that we've seen over the last couple of days, which I truly think is just a bounce off of a major support level, we're not getting a lot of participation in longer term trend when it comes to stocks above and below the 50-day moving average. Let's jump directly into it and get a little bit deeper. So you guys can see that we do have a pretty good support line here on these levels. And so what I'm looking for is something to break this or continue higher from this. Now, one thing that I want to point out that is a big deal to me is this volume. So take a look at the volume that we had when the stocks were actually moving lower in these situations, right? But as the stocks start to move higher, in this situation here, you can see that we do have decreasing volume. So I can't think of anything outside of just a oversold bounce. We talked about this on Friday. Rob made mention of it. We're at a support level. We would expect a bounce. And to tell you the truth, folks, I expect this to go a little bit higher even tomorrow and maybe even into Thursday. But what we need to focus on primarily is this slope here. This descending pattern that I am seeing in the overall markets, well, at least in the SPY here. So it is beautiful. It has actually turned at a 50-day moving average. We're below the 20-day moving average. We've bounced off a pretty good support here, and we could be moving a little bit higher in the shorter term. Let's get to the Qs, because you guys are going to see that the same thing is true with them. So jumping into the Qs, you'll see we got a very similar pattern. It has this nice, the same descent going on here. We can actually draw this along the bottom as well. But what I'm focused primarily on is the participation of the markets. This move here correlated to the move we've seen over the last couple of days. And as you guys can see, the volume has dropped off. This is an oversold bounce at a support level. That's all I can take it as. Now, what does that mean? Well, I'm not going to go ahead and try to buy bulls. That is for sure. But I'm not going to add some bears here until I see these markets roll back over. We did get a really good rollover last week or a week and a half ago. So I kind of want to see that same thing happen. Now, if I'm in any sort of bearish position here, I'm going to stick true to it because it's probably going to stay right in line with what I expect it to do. Moving into the heat map, folks, you guys can see that we did have a primarily green day, which we do expect off of a bounce, but what didn't participate? Energy. Energy being one of the caveats or one of the things that we're worried about. You can see that oil did drop 2% today. You saw that earlier. But the participation to the upside was renowned across the board. I mean, it was pretty much in all sectors, which just leads me to believe this is more of an oversold bounce than it is anything outside of just that. Let's try not to overthink this, and let's follow the pattern that is in front of us. So let me break it down for you, folks. Take a look at this chart. This is my outlook. I'm a +1 to a 0. I did a +1 because we were in the second day of a bounce off of a pretty major support level, so I would not be surprised to see us bounce, gap up a little bit and just kind of stay sideways. However, for us to go in line or to go open up tomorrow completely sideways and stay there, that's why I'm kind of at this +1 to a 0. But the monthly outlook is absolutely still bearish. We could rally all the way back up to that falling 20-day moving average, folks, and I am still bearish. So if you have bears, stay with them. If you have bulls that you want to get into, be reluctant. This could be, well, as it sits right now, folks, this is just an oversold bounce. So try not to overthink this, once again, or make any decisions that will outsmart the play in the long run. Potential trades, not a lot. We do have some great trades over the last few weeks. If you guys want to take a look at those, please just add them to your repertoire. But what I saw was OHI and Roblox. A couple of things that I saw move to the upside. DraftKings pretty much sideways. FITB, Citi, and ADM, which I do believe has earnings coming up soon, are still looking pretty good. Actually, Archer Daniels had earnings this morning, so we could play this as a continuation. Let me start with the bull first. This is Roblox. This was talked about in our trading room over the weekend, and I do like it. I still do like it. I think it's a pretty good move to the upside. Take a look at the resistance that we saw here. A nice little high base that actually broke higher. Now, I would like to see a little bit more volume. You guys can see that this volume was actually a little bit higher than previous. I'd like to see it a little higher than that, but based on where this broke out of is where I would focus the most. Let me see if I can get a line here for you. Right around that area, and it looks like it shadowed away from it towards the close of the day. But if Roblox could try to find some strength and climb back up to its base area, or excuse me, where it gapped back up to 38, I think it should be pretty clear up to that point. The problem is with these stocks is the motion of the overall markets will not allow that. It might be inhibited by that. So it might not race back up to 38 because the markets are ready to roll over. But it is an outperformer, and that's kind of what I wanted to show you guys. Let's move to DraftKings. Now, DraftKings was pretty cool because it was a sideways stock. And this I had on my sideways watch list for a little bit. But take a look at this last drop that it had. This got a little nervous because it was below that 28 that I wanted to stay between. But guess what, folks? It is right back up to its area. It is right back up to this range, which we discussed in the first place. Let me draw a couple more lines here. 32 being the low point and 28 being the high point. Sorry, folks, I got that backwards. 28 being the low point, 32 being the high point. But it is right between those areas, sitting around that 30 mark if you guys want to play this sideways. Let's move into our bear. This is Archer Daniels Midland. It did have its earnings, and they did not do very well, as you guys can see, when it comes to the overall move. Here is a support level that it actually broke, and based on the size of this candle, I know it sucks because it is the day of the earnings, but let's see if it can stay below 70, and we could play this as some sort of a diagonal descending pattern to the diagonal side. The volatility will be high, so if you guys are doing puts or you're doing any sort of a debit spread, meaning you're buying puts, it's going to cost a lot. It might be advantageous to wait for to see if this can actually rally back up or kind of revisit this area here around 72 or just above that 70 level, 70 and a half before rolling back over. So give it a day or so, keep it on your bear watch. It might be something to add later on. So what do I got, guys? It's bearish. We're bearish, flat out. Expected bounce off support levels set yesterday and today. We saw it happening. We knew it was going to happen. We talked about that level, and it absolutely did. Keeping an eye on the volume and the VIX, the volatility index, just dropped a little bit, but the volume is super weak on this bounce. This means it is no more than a bounce. This isn't the bottom. Things like that, just keep that in mind. This could take a couple of more days. So for you guys that are anxious to get into bears, please wait. I've got my outlook of +1, which means for the week, which means I expect this to move a little bit higher before it rolls over. Be mindful of resistance areas as well. I don't know if they're going to get there. It just depends on the umph or the push when it comes to these bulls or this bounce itself. But I don't know if it's going to get all the way back up to that resistance level of the falling 50-day moving average. I don't think it makes the 20 personally. But hey, let's trade the markets in front of us. Strong numbers in retail sales and unemployment claims last week. We do have the GDP, unemployment, and PCE coming out this week. GDP is expected to be very strong from the 2.1% expectations all the way up to 4.7%, some even hint of 5% of growth. Now, that is amazing if we indeed found a bottom, but it's horrifying if the Fed doesn't think inflation's in check. So we'll see how the markets react to this, and we'll see what the Fed says about this going forward. Earnings reports, we got Coca-Cola, Verizon, GE, Microsoft, Google, Visa, Texas Instruments, Waste Management. We got all sorts of good stuff, folks. They're coming up over the next couple of days, so make sure you're being mindful of that. All right, guys, as always, thanks for joining me. We'll talk to you next time. Just be sure that you follow the markets that are in front of you and understand that this is still an oversold bounce as far as our stance goes. But we'll see where we go from there. Thanks for joining me. Talk to you next time. Bye, everybody.